Very good morning to everyone, and there's a lot of buzz around here. Happy to see the crowd who have come here. Um, Special thanks to W.Media for arranging events like this because this is one where every ecosystem operators, vendors, as well as clients come together, exchange notes, and a lot of ideas. So kudos to them. Without much ado, I would start our conversations today. Um, what we are seeing today is a little bit of a pivoting that we are doing from the usual discussion that happens in conferences like these. We are going to touch upon the point of investments. And what we are going to talk about is what are the key factors that investors are considering when investing and how are these changing? Today's world, when we are looking at it, is fast changing. The environment around us about 2 years back is not the same which is there right now, and it would not be the same going forward. AI has taken a lot of people's imagination. What it does is it brings a lot of challenges. What it does is it brings a lot of avenues. And these are the things that we are trying to have a discussion around with the team here. I have today with me Saurabh Bharat. He is the CFO of Yotta. Um, a lot of thanks should go to the CEO for Yotta to bring data center into perspective in India over the last 4 years. Sunil's vision, a lot of his discussion, great respect for him. And it's my pleasure to have Saurabh here to talk about how they are viewing the investment scenario in the country. I also have Narendra Sen here, the CEO of RackBank. Narendra, many congratulations on your Raipur project that is taking
Thank
shape
you.
now.
Thank you.
It's something which is everyone would be viewing in because Raipur is a new location, and how does it take shape is something that really makes a big difference in the way people would start looking at deep country DCs. I'll start with my first question. Um, let's put it across to Saurabh. Saurabh, you have been now in the industry for over 5 years.
Right.
And in your front, you have seen things changing from where DC co-location was the main business that was for DCs. And now, at least you have pivoted from DCs and taken a larger view on the cloud business as well, Yotta,
Right.
right? The Shakti cloud business that you have brought
That's
in.
right.
And you have a lot of visibility around AI. So let's start with the basics. As a finance profession, take us through your thoughts while contemplating steps specifics to expansion and growth with Colo as well as AI into perspective.
Okay. Yeah. So, two, three things about it. Look, the industry keeps evolving as we move, right? We are in the technology space. Technology can keep changing. Industry will keep evolving. Um, we 5 years back were talking about co-location, and we were among the first ones to try and do something in cloud and managed services, which was kind of not there. Only the hyperscalers used to do cloud. Over the journey, we realized that AI is now becoming big. So as Yotta, we moved there. I think the key thing to look at is, while investing, is three things. One is demand. You would always first look at where the demand is moving and whether you can get some anchor load to start your investment, and then you can keep growing from there. So whenever you're looking at investing in the data center space, first you should look at demand, because also what happens is, once, let's say, a hyperscaler has given you some demand for a certain location, you would expect that the others will also follow suit, right? So that's probably the right location to go to. Second part you would want to see is the infrastructure in terms of, let's say, power and fiber. At the end of the day, that those are the two lifelines of data centers. Um, so you want to have a location where you have adequate power to grow, and you are probably around the grid for both power and fiber, so that you can get both of these at a cheaper rate than most other competitors could. I think finally what you would also want to see, especially with movement into AI, is scalability. As we move into higher compute, we would need more space in terms of megawatts of data center space. So it probably makes sense to look at it that instead of having one data center building at one location, can I look at 4 or 5 or 6 in the future, and already start thinking about it and investing accordingly, let's say in a data center park. So I think when you're looking at investments for a long term, those are the three things you should look at while getting into it.
So these are the non-negotiables for you when you consider any of the
Absolutely.
investments around that. Narendra, Saurabh brought a very important point of having an anchor tenant. With an anchor tenant in your bag, do you think investors would look at the investment scenario differently from that of a speculative nature?
Yeah, so I think AI infrastructure, because RackBank's now entire focus is AI end-to-end delivery, which includes AI focus co-location and a GPU as a service, which is managed service. So this focus help us out to convince our investors that this is a niche, and we are doing already in last 5-7 years managing the bare metals in tier 2 cities, and because these servers in the nature is high density like 10 kilowatt, and the rack density has changed, as I mentioned in the earlier discussion, that uh, uh, it's a purpose built. You have to redesign the entire data center, so it start from zero. And when we started talking with our investor that this thesis will work because this is the demand from the new age of AI hyperscalers coming to us, and they don't care about the location. They just care about the power. They just care about this. And we have reduced their TCO by this much compared to traditional data center provider. So that makes sense for our investors to double down on investment. We are not going speculative. We are, because the going speculative is going to give a bad experience in terms of money management and all. So what we did, like, the buildings are ready. We are doing the investment and the fitting of, let's say, PowerShell building ready. The hardware we're only deploying when we have a customer, the active component which we call servers. We also give a server because enterprises are not buying the GPUs because, but they don't want to go to the cloud and don't want to share their data with anyone, right? Because it's a machine learning, it's a training. So their data is critical and they are more conscious about sharing data over a cloud. So the niche which we identify, that these guys doesn't want to buy the hardware, but at the same time their existing data center doesn't support the high density. So let's create a combination and help them to launch their AI strategy. So that's how we are doing it, and that's how it's helping us in tier 2 cities like
So
Indore and
clearly that
Bangalore.
has a favorable view from the investors when you have a backup of an anchor tenant, because the investments are seeing some bit of returns and then what you need to do is add on to it. That's how the industry is being looked at. Great. Um, I have one more question around ROI only. The need for ROI for any investment always is the focal point, and that's important for investors who come in, right? What is your strategy for realistic goal setting? Because when the investors come, probably they have a return expectation which is benchmarked against some economy which is different in terms of how it operates in India. So is there some goal setting that you help them to understand the market and have the industry at large been successful in getting that goal setting done? Saurabh, you can
Yeah.
start, and Narendra, I'm sure you'll be having a lot many view on that as well.
So, look, as we keep evolving, obviously, whatever new thing we get into, given the uncertainties, we will be looking at a better return to be generated from that, s- let's say, business. So, let's say co-location has a certain level that it has reached in the country, and there is a certain return expectation that everybody who goes there would have, let's say, around mid double digits. Uh, Now, when you move into cloud and managed services, because you're investing a lot more into technology, you would expect a higher return because there is a life of the asset that reduces. As you move into AI, again, the servers itself have a particular life is one thing, and second is they become obsolete because a new GPU would have come in, right? So you would always look at return being higher initially when you're looking into a newer technology. Second thing that you would look at is the investment should, over a period of time, make sure that you are also growing with it. So let's say today in India, we are looking at GPU as a service being bare metal. Over a period of time, probably the GPUs that you acquired on bare metal will start generating a lower return. So you will probably need to move them into services, into inferencing. And you will need to start acquiring newer and newer GPUs. So you will always need to see how the life of the asset can be enhanced over a period of time by doing certain more things on the asset itself. Finally, I think you should be nimble in terms of, as Narendra ji also just said, you need to have first basic infrastructure you will have to build initially, right? But then you have to go modular. As demand keeps coming in, you keep putting in more and more so that you don't get caught off guard that you put into certain technology and that didn't work.
Narendra, your view on this?
So it's ROI around, right? Question.
It's on the ROI, the expectation of the investors vis-a-vis what is there in the offering in the country. Is there some goal setting that you need to do to help them understand the economy better and look at a more realistic view around ROI?
So AI is a high yield today asset class. What we call it asset class, it's a digital infrastructure. But carefully investment definitely generate a better ROI. But you have to, it's a beyond real estate. You have to add a lot of components to it. So you can generate say 80% EBITDAs on the GPU compute as a service, then you can build get the EBITDA better on the AI colocation as well. Because if you don't add managed service, you will not make ROI faster. And the investment goes into it is humongous, like huge. Like earlier, the one rack, say investment in one entire rack active component is 2 crore. Now one rack is 25 crore or to 30 crores in one rack. We are building 1 megawatt at 30 crore or 40 crore rupees in a megawatt. Now imagine that one rack is consuming that size of investment. So yeah. Yes.
We all know now, and my conversation have been all surrounding around AI, and that's what is happening, right?
Right. That's the flavor of the day.
Yeah. As in, colo business is steady, it goes on, it will continue to build, it will have its own little takers. Cloud also would definitely grow because everyone would not be looking at any of the AI components, right? But AI has taken over at least the conversations around us. Some of these guys have invested a lot in the country as well, and that's happening across Mumbai being the most focal point around the investments around the AI deployment. But my question is, how has AI business impacted investment decisions and expansions? Now, I'm talking about this from perspective of the conversation that we're having.
Right.
Investments from data center point of view, and how are investors looking at these investments? Because the quantum has jumped, actually it leapfrog beyond and more of an expectation point of view. Is there enough investment chasing this sector today? Do people have enough avenues to get business from investors to come and support and be part of the growth journey? Narendra, you've been in the forefront of a lot of these discussions with investors. Is there enough investments chasing this sector right now?
Yeah, so the positive moments is there. Look at the core view story in US, then the Nebius story in Europe. These stories started coming out. The ultimate goal is it's required huge capital, right, to sustain and survive in this industry. Because the customers like, I'm just giving an example, OpenAI. OpenAI is consuming and their recent raise are going to only deploy for data centers and the capacity. They are buying whatever is exists in the market like a GPU capacity. US they are building $100 billion target project, and entire thing is going to consume by OpenAI only. Now imagine the one customer is consuming 100 billion worth of investment. The same customer wants to go global, and look at the India as a billion users consuming OpenAI and other AI applications. So definitely they also want, because they can't go everywhere and invest 100 billion. They need local partners, operators, cloud providers to support this demand. They are growing every week, double as a OpenAI. Just example, one company. There are 20 large language model companies. There is a video generations companies, and in fact, large hyperscalers also buying from this new age providers. So the investor is very positive. It required huge capital. India is like a not so much early mover because the home market is US. Everything happened in the US, and then Asia, then Europe, and then Asia. That's how it works. But India has a very unique advantage of the population, and that's why these large guys has to come to India. Now, in terms of the investors, like investors are, uh, they are seeing all the reports. They are seeing all the global happening, and they don't want to miss this opportunity. So they are betting on this, but not heavy pocket like putting 100 million, 500 million in one go. They are, conservative on the putting investment upfront, but they are open to do if you have signed the contract. If you have customer, they are ready to put you uh, a larger check, give you a larger check, like in the range of 100, 200, 500 million. But yes, the investors are ready to support. I have seen the positive. We raised recently in March. We got very positive response, and our thesis is only this vertical integration of the GPU infrastructure and the AI co-location. Our thesis is 100% AI focused platform.
You brought to the point of your raise that you did. Your raise is majorly Indian investors who have believed in the story of AI. Am I correct or wrong on that?
Yeah, that's correct. Indian investor, and Indian investors has also seen this because ultimate goal is how fast you can generate the ROI, and they also wanted to see the capability that we will be able to deliver or not, and they are very positive toward this industry. So Indian investor plus banks are also very supportive on this. So we are deploying $100 million worth of
Wow.
infrastructure in one location in Raipur.
This is the construction finance that you
Yeah,
had been raised.
construction is already been processed, and we are delivering the first site in November this year only. So we decided like we have to change this, like not building a vertical. We have to go live fast, and that's a problem our customers are facing. That the demand is so huge, they have to pause their launches of new products. Imagine that I'm an open AI. I have built 5 new products, but I'm pausing those products because
I
there's
don't
no
have
infrastructure.
capacities, infrastructure to
Yes,
give that in
and
this.
the infrastructure companies are not building with that phase which required.
Probably that also has a lot to do with the ecosystem that we have, the permits, approvals. They have its own time tenure that you will have to figure out for. So, building the core and shell is the biggest challenge I see in that. The rest of the things are all entrepreneur driven, right? So it's much
I'll add
faster.
on to this, Benjamin, why we chose Raipur because of this reason that within 2 weeks you got all the permits. Imagine that the tier 2 states or states are supporting digital infrastructure like anything. Crazy. And the AI workload can be anywhere. It doesn't
Absolutely.
require next to my landing station. It's no more fiber driven. It's more power driven industry. So the fast track we saw in Raipur, and that's how I'm confident that we'll deliver the first site in November. And I believe that all the states are more positive toward this infrastructure and support. And it's a Dallas of India. If I say Virginia is Mumbai, then the central India is Dallas. You have huge power, you have huge support from the government and the power. Our power cost is 4 rupees. Imagine that power cost in Mumbai, power cost in other markets. I have
Yeah.
TCO, sure short TCO, like, okay, if you compare with X to Y, here's the TCO. Because everything boils down to the TCO and the ROI. And the data center should be run by CFO, not the CEO. Because it's financial engineering, it's an infrastructure game. It's a driven by the CFOs only.
I guess Saurabh's market standing now increases tenfold by this one statement.
No, in
And
any case,
to
any
that
business
point,
CEO and CFO have to go hand in hand, otherwise it doesn't work. So,
but to that point, kudos to the government of Tamil Nadu as well. Their initiatives have brought almost all the DC operators in the country and take note of delivering something which is really credible in the city here. So kudos for that. Um, I would want to ask one thing in now changing environment where people are pivoting towards AI. How do you see the business of colo and AI surviving together? And I'm talking about not as an operator, I'm talking about as an asset. When an asset is delivered, how do you look at trying to create compartmentalization and also trying to figure out a colo opportunity in the same infrastructure that is getting created for AI? is it real or that is a myth? Can that sustain together, or it has to be get with a complete focus and completely differentiated approach? Saurabh, your take, because you've been in both business, right?
Yeah. So I would say they can coexist. If we take our own example, in Noida, we have a hyperscaler and we also built additional capacity for our own cloud. And we are also looking at putting in our own GPUs in that same asset, right? Similarly, in Navi Mumbai, we did liquid cooling for a customer 5 years back, right? Now in AI world, we need to do liquid cooling for a better efficiency. So the same building or the same data center can coexist. And I believe the demand will also coexist. While AI is the flavor of the day and probably it will be the fastest growing for the whatever foreseeable future you have, the reality is the cloud will stay, co-location will stay. Those demands are also permanent. So you will basically, I think what you will need to do is your core and shell should be capable enough to handle anything. As you fit out your MEP and start building a mechanical infrastructure, etc., you could maybe go modular as to different floors could be doing different things.
I have a very um different view in terms of the way the industry is forming up. This is a very nascent industry, right? And I'm just talking from a real estate professional. It's a nascent industry. So the initial focus was all on greenfield development and things. Now things are changing. Maturity is coming in the market. As a operator now that you've been in the industry for so many years, do you think there is enough opportunity for investors to look at this industry as a core asset, as an asset that would come in the market from a purchase point of view, where operators would be looking at a sale and lease back? Or do you see consolidations between companies to merge together and create a better efficient environment? Is that likely to come up in the next 2 to 5 years?
So I think. Hello. So thank you. Uh, yes, the consolidations will start coming, but not now. It's just started industry, and the democratization of infrastructure has not happened yet, because it has to reach to the every state should have at least uh, what I believe it's 20 to 50 megawatt of data center capacity. We have 29 states. Imagine that the capacity should be there, and then only after that you'll see the democratizations, the acquisitions, and all those things. But it's just started, and we have to have enough capital for that to build that much. There is a huge interest in the market from the new age real estate developers who wants to jump into this side. Um, so the more and more assets has to be built. But again, it's like a building a five-star hotel without guests doesn't make sense. So you need someone who can really go and make the ROI better. And what we believe that what is going to miss in this fast race is the PowerShell ready buildings is required across India, because you can't be centered to Mumbai or any one city, because this is going beyond gigawatt alone for AI in coming 3 years down the line. I'm very precise on the numbers. Why I'm saying that, um, because look at the announcement in Saudi. They are building 5 gigawatt for AI. The Saudi is building a 2 gigawatt. Data Vault has announced after Trump visit. And why entire Saudi MENA belt is bullish on AI? Because of this reason, they have capital and they have consumer, and we have potential to build low cost data center. So I think the ROI is faster and it's more sustainable, self-sustainable. And AI native is the must. Sovereign AI is must for any international players who wants to get the access of this population. So they will definitely come, but they will look only plug and play kind of solution.
Saurabh, your quick thoughts on this, because we are just almost up on time.
Sure. So I would agree to Narendra that probably right now is the growth phase. You will, as of now, you have seen so many new players coming in over the last 3 to 5 years. Um, at some stage, maybe we will start maturing in this industry, and at that point of time, maybe not 2 years, but maybe 5 years, you will probably start seeing some sort of a consolidation. There would be players who've not done as well as the others, and those will start withering away, trying to get acquired. And also there would be PE funds who would have put in money, they would want an exit. So consolidation in that sense will probably start happening.
Yeah, a lot of exits would come in the next 2 to 3 years
So-
because it's a 7-year horizon that has already
Absolutely.
been seen. I am on borrowed time right now. I have two questions to both of you. And this is very essential for the larger crowd to know because a lot of business depends upon particular point of diffusion policy. How do you see the diffusion policies taking up with the latest announcement? Is that a relief, or it's just that the acidity has just been postponed for some more time? How is it that it's been viewed at Narendra? Because both of you are in that ecosystem, both of you are tracking it very intently. What is your take on this?
So I think AI is a war. We can see it very, very clearly. It's a technology war which US is leading it, and their economy is like 25 trillion. So they are targeting to make it double. So where the dollars are flowing across the world, dollar is flowing to America, and America doesn't want to leave this, alone as a AI. So, but their tough competition is with China, and they have analyzed within this tariff war that they have to give a freedom and flexibility to other markets, else other market will start adopting or innovating the chips. So better. So that's a threat. I see that the policymaker in US started seeing that, and that's the impact of deferring the diffusion policy. They will definitely come up, but you never know. You have to. We are constantly working on it, trying and figuring out because our business model is based on this only. And imagine the growth of Malaysia has taken in past 5 years. It's surpassed the other market in Asia Pacific, and that's because of the AI demand. So I believe that this will definitely, the diffusion, if it pushed or deferred, then this will support India's AI or digital infrastructure for sure.
So a quick view on that.
So my view is, of course, we are in a a bit of a challenge that we were, let's say, first half of this month when there was a 15th May imminent deadline. But the uncertainty exists. And as Narendra rightly pointed out, there will probably be something that the policymaker over there will do. But my view is it will probably be more diluted for the right reasons that Narendra put up. That you will need to otherwise you will start seeing competition from the developing world, which could be much cheaper. And probably the protection that they're trying to give to their LLMs may actually turn on the other side. Plus, obviously, the largest companies developing the chips are also theirs. They are also doing the lobbying. So you will probably see some sort of a middle path that they will see, but we do live in a kind of uncertainty till certain decisions are taken.
So necessity is the mother of all invention is a fact which is pivotal in the way US is going to look at this particular region. Thank you everyone for your time. I'll just quickly take 1 minute to recap. We spoke about certain things around investments, and you mentioned that some of the non-negotiable aspects around investment remains demand, and an anchor is the most important aspect to it. Second is infra and power. Scalability is the other one. Um, the returns are a view of what the industry is in its maturing phase. New age technology investments would require higher returns is how the perceived notion is in the market. And when we are talking about the diffusion policy, is saying US has to relook at the way they are trying to do market business here. While investments are flowing in US, they would want to utilize every penny of it. They can't really get others to innovate beyond and more and then become a stiff competition to them. So it's sustaining along with them is the best market view is what is coming as a popular view here. Thank you so much everyone for being a patient listener here. I appreciate your time and effort that you took to listen to all of us. Hopefully this has given you some view as to how the investment scenario in India is right now. Thank you so much.
Thank you.